Let's also get your perspective from Ramesh Damani, who also acknowledges that it's a tough time for investors right now and they just have to sit this out. That's the view. Let's listen into that exclusive conversation. He does believe that India will be a 5 trillion economy, as the government has been targeting. He's looking at a time frame of about 5 to 8 years.
There are lots of lessons that you can take away. The most important lesson is that what I said in the conclusion, that when I joined, the index was 800, today it's 40,000. And in the last 30 years, almost all sort of tragedies across India. We've sent our gold to the IMF, we've had Kargil, governments have come and gone. But the long term is the triumph of the optimist, all right? So while we're going through a particularly bad phase right now, I think it's, most people will admit that we're in a very tough phase. There's a slowdown in the economy that is unexpected. There's a slowdown in corporate profits that is unexpected out there. But the arc of the stock market still, I think, points higher. And what I've learned over long periods of time is to find great businesses. And if you find great business, not too much worry where the market is out there, and sit it out. That you might obviously not get immediately, but if you can find stocks that will compound over periods of time, I think you'll have served your portfolio well and yourself well.
Mr. Damani, you're also somebody who has a close eye on global, investing scenario. You've seen economies evolve over time. What phase of Indian economy are we right now here, so that one could understand how Indian markets are likely to be 5, 7, 10 years far out, the way China evolved, the way many other economies in your view have evolved?
Well, we are in an exciting time because, I think every bull market tells a story, and the story of this bull market has been that India is going to leapfrog from, say, like Japan did in 1960s, when it went from a third world country to a first world country. Now, I'm not saying we're going to make that kind of quantum leap out there because our population base is much bigger out there, but truly we're going to create a middle class of some significant size in India based on economic prosperity. Now, that has been delayed a little bit because obviously the economy is slowing down right now. But ultimately, I'm pretty sure what the Prime Minister said, that we'll get to a $5 trillion economy. It might be 7 years, might be 8 years, it doesn't really matter. We are going to get to a $5 trillion economy, and that will create good sorts of prosperity for people. So I think on the whole, I'm constructive on our economic case, despite it being troublesome. But anytime you have to weed out, the amount of inefficiency, corruption, taxation evasion, it does cause some pain. And I do hope that we can recover. It does require some strong mandate from Delhi, but I'm hopeful that will happen.
So valuation, or emphasis on valuation, was quite a significant part of your presentation. How are you assessing various parts of Indian market valuations after some correction which has panned out right now? Do you see scope of alpha next couple of years?
Like I made in my presentation, starting point values matter in a stock selection. So you're buying very expensive stocks at this point, hoping alpha or momentum will take them higher. They may, but they typically, don't end very well. Those kind of bursts, even glamour stocks correct and, stay in a correction zone for years, sometimes decades after that. So it's important for investors to find good valuations, and I would suggest to them, on a contrary basis, to look at these mid-cap stocks which are bombed out completely. But some of them have good corporate governance, good visibility, good earnings. It's the eye of the beholder. You could probably find value in those businesses.
You must have observed the various commentary coming from corporates from all sections, not only autos and any other. And you are also a quasi-corporate now, the chairman of DMart. What's your view? What's the handle on the demand scenario as far as the consumer goes?
To be perfectly candid with you, in the retail part of the segment where I'm looking at, there is no slowdown growth. You can see that from the numbers. But if you look at auto or cement, obviously there is, some slowdown in bigger ticket items that are not popular consumption items.
Because it made a headline when Britannia said that biscuits sales are falling. You have all the categories under DMart.
Yeah, I don't want to particularly talk about those things because those get into areas.
But you think that slowdown issue is exaggerated?
to be honest, yes, there is a palpable slowdown in many industries, traders, community fighting with it. But there's some sectors which have been immune to these sort of problems. So I would not necessarily paint it with the same brush.
Right.
There's some industries are struggling, and I think they require some stop. But we need energy in this country. I think forget everything else. The government needs to perhaps lower the direct tax rate, perhaps go with a PSU privatization program. From what I understand, Delhi is seized with the problems. I think they understand that the economy is in pain, and they need to give proactive measures to revive it. And I think they will come. So I'm hopeful.
What are your thoughts on disruption? Some of the categories like shared mobility, all of that have already got disrupted. But what is on your radar, or would you like to share some of your observation, if your readings or what you're looking at in the ecosystem, categories which are likely to get disrupted?
It's extraordinary what you said. I mean, everyone is well familiar, of course, with the Ubers and Olas of the world, which has a direct impact on car sales, for example. But recently, you would think that America would have a large non-vegetarian population. But even as I speak to you, the Impossible Burger launched by Burger King is challenging the basic pretext of the non-veg industry, that you can have your protein and you can have it on a plant-based diet as opposed to a cattle-based diet. And the profound implications for this on livestock companies, on processed food companies, all of which will undergo rapid change. So technology is challenging various industries at various times, and I think as an investor we need to be cognizant of that.
In fact, we also saw the speed at which Beyond Meat stock really
I was stunned. I thought it was just some fad going on. Who's going to do that? And maybe it take 20, 30 years before it plays out. But there's a very clear possibility now that investors will not prefer beef or chicken, but will prefer plant-based protein, because it's not only environmentally more friendly, the footprint for water is much less in those compared to the other, how many pounds of water, liters of water it takes is huge compared to the pea protein that we talk about. And that economic implications are fairly staggering. So industry after industry, automation, artificial intelligence, robotics, Ola and Uber moving from EVs to AVs. I mean, investors have to be cognizant. There are a few businesses, of course, which I try to find, which is my job, is to look for businesses that survive moats. Like I said, there are some businesses, the sin stocks, for example, smoking, alcohol, they seem pretty recession-proof. If you're feeling bad, you want to drink. You're feeling good, you want to drink, right? I don't think that business is going to be impacted in the immediate say-so. So there are a few businesses. Investors should look for those businesses, but otherwise you should keep an eye on the technological cycle.
Are you giving a nudge that Indian alcohol and similar stocks, which have gone into a bit of a range for last couple of months and quarters, are they looking attractive?
I mean, I would say that the starting point a few years ago was too high. You're paying too much of a price for them. I think there's a great stocks, they're great franchises. I think profitability is, you can see the profitability for next 2, 3, 5 years down the road. So I think the stocks now have corrected and they've come to somewhat more reasonable levels, so they'll continue to perform.
One last question, because you have observed Mr. Trump for long and the functioning of America. We are just months away from elections there as well. The way trade war issues panning out, the way now the fresh geopolitical risk in Saudi has erupted, what significance does it hold for Indian markets?
The Saudi Arabia thing has caught me by surprise as most investors. You think about it rationally. Saudi Arabia has a $75 billion budget in defense. Third highest after US, USSR, it's Saudi Arabia in terms of defense spending. And yet, two key installations, which is their lifeblood, they could not protect. So that means they're more vulnerable. Who knows? I mean, this could escalate, get out of hand, because clearly Saudi Arabia was perhaps sleeping at the wheel. I mean, it's inconceivable to me that you would be so vulnerable in your key installations. So that could lead to some geopolitical storm going on. And given the fact that Mr. Trump is already pushing the pedal with China, for example, a lot of the medicines in the world, the API comes from China. So what they did to rare earth, they can start moving the prices up or cutting the supply of this thing. So there is a lot of problems that need to be addressed by investors in the world. And the Dow has had a 10-year bull run. So the 3 times it's gone to the 27,000 level, it has fallen viciously. This is the 4th time it's trying to make an attempt on that. Let's see where it goes.